Hey, what is going on everyone? Welcome back to another YouTube video. In this video, I have a question I want to answer, and that is, what is the best trading time frame I should be trading on? So I have some stuff written down and some good value and knowledge in this video to give to you guys that are just interested into knowing some more details about trading time frames. What exactly is a trading time frame? How to select a trading time frame for your trading strategy that you're developing, or if a trading strategy can be used on different time frames. I'm going to talk about the benefits of the lower time frames and the higher time frames. So when I refer to the lower time frames, I'm referring to like the 1 minute chart up to the 30-minute chart, and the higher time frames is the 1 hour up to the daily time frame. For those of you who don't know me, my name is Jerome. I'm a full-time Forex trader based here in Sydney, Australia, and I'm also working alongside Austin Silver as an ASFX coach, helping struggling traders become profitable. I look forward to getting into this video with you guys, since this is a question I see asked a lot in the trading community. So let's get into it. So what exactly is a trading time frame? Now, when you select a trading time frame, whether it's the 1 minute, the 5 minute, the 15 minute, the 1 hour, the 4 hour, the daily, you're essentially looking at price action in one candle. So if you select the daily time frame, you are essentially looking at 24 hours worth of price action, price data in one candle. If you go to the 1 hour, you're looking at 60 minutes worth of trading in 1 hour in one candle. Same with the 1 minute, you're looking at all the price action, all the transactions and order flow that happened within 1 minute displayed in one candle. This concept applies to every single time frame, whether it's the weekly, the monthly. If you're looking at the monthly time frame, once again, you're looking at a whole month's worth of price trading, a whole month worth of transactions in the Forex market in one candle. So knowing this as the very base of a foundation of the definition of a time frame can really kind of help you go forward in choosing and finding out what trading time frame you should be using. So how do you select a trading time frame? What is the best trading time frame you should be using in your strategy, or every trader should be using? Well, that depends on the strategy you're testing, depends on your lifestyle, it depends on your personality and your trading psychology and where you're at. Are you a beginner? Are you working full time? Like with your lifestyle, do you work a 9 to 5? Do you have family commitments? So we're about to get into that right now. So let's talk about some of the disadvantages of lower time frames and trading them. So when you're trading the lower time frames, like I was saying before, between the 1 minute and 30 minute, you are going to be required to have more screen time. It is a much more day trading approach. So you're going to have to be actively monitoring the charts in front of your computer screen for a few hours to take advantage of the price movement and gauge where price is going and make your trading decisions based off what price action is telling you, or combining that with indicators as well. It can be a little bit stressful if you don't know what you're doing. If you are a complete beginner and you start jumping onto the 1 minute time frame, you are going to be pulling your hair out essentially, because there is a lot of market noise, which we'll get to that in a minute, but it can be very stressful if you don't know how the market moves and you don't have a very solid foundation of price action, trends, and everything like that. You need to be very quick in making your trading decision. This comes back to being very stressful. Unfortunately, with the lower time frames, yes, they do move quick. If you're in the 1 minute, you really have to start and be on your top game to be able to take advantage of the quick candles that are opening and closing, and making your trading decisions based around that. With the ASFX system and the D1 system, we are using the 15 minute to gauge overall trend, and then we're jumping down to the 1 minute to find our very tight entries and stop losses, so we can really kind of get a good risk to reward profile and a good kind of trade setup using tight entries and tight stops, like I was just saying. So there is advantages there, which we'll get to in a minute, but you got to be quick on the 1 minute, and you got to be actively watching your charts and be on your top game, like I was saying before. On the lower time frames, there is also going to be more market noise. You're going to be seeing a lot more kind of movements. You're going to see a lot more false breakouts. You're going to see price breaking out of levels and then coming straight back in. So you got to be aware of that when you are on the lower time frames. Just be kind of more mindful that there is going to be more market noise, and you may be stopped out more times than not. And the last kind of disadvantage is news can easily shake you out on the lower time frames. You are more acceptable to random news events hitting your stop loss, since on the lower time frames, your stop loss will be much tighter than if they were on the 4 hour or daily. So now let's get into some of the pros of trading the lower time frames. And the biggest one for me is more opportunity. Now, as a trader, opportunity is great. We strive off that. And you can also get more kind of volume and volatility. As more opportunity presents, you are able to be more selective as well. Now, if you're trading on the high time frames, unfortunately, you're not going to get as much opportunity as you do in the lower time frames, which means you can't be as selective as you can on, let's say, the 15-minute chart. Because once again, on the 15-minute chart, you may have 2 to 5 setups per day present, and you can be selective on taking the higher probability trade setup, which is a great advantage as a trader. It's fast paced, so this goes to saying if you're a beginner, it can be a little stressful, but if you have a system, if you have systematic rules such as the ASFX systems on the lower time frames, it's a bit more easy to kind of navigate and understand where you're getting in, where you're putting your stop loss, which means faster market, you're in and out of your trades quicker. You can develop great risk to reward profiles, hitting 1 to 2 risk to rewards within minutes to under 2 hours. A fast-paced market means quick profit, which equals sometimes less stress. When we can be in and out of a trade, we can be done with our trading session, one and done, and go on about our day. You are not holding positions overnight. Now, this is something that kind of really affected me in the early days of trading, where I'll open a position on your USD, for example, and I'll go to bed waking up every hour checking it. That is just my personality. I'm sure if I did that now, I'd be much more relaxed and wouldn't care, since I am protecting my position. With my old system, I unfortunately didn't do that, but now I manage my trades. I'm locking my stop loss at certain positions as the trade progresses, and I'm taking profit. So I could happily go to bed knowing that whatever happens, happens, and I'd be okay with it. Once again, that is higher time frames. On lower time frames, you're going to be in and out of the trade. And then it can be easier on your trading psychology, like we just touched on all those previous things. For me, being able to come in on the lower time frame, have a clear set of defined rules of what I'm looking for, when I'm getting in, when I'm getting out, and when I'm taking profits, and how I'm managing the trade along the way, was very easy on my trading psychology. It was a clear process. It was very simple, very easy to follow. And on the lower time frames, you can kind of build that structure into your day, because you're just kind of focusing on what's happening intraday, what's happening throughout the day, and you can make your trading decisions behind that. You can take your trade, you can either get stopped out, take a re-entry, hit profits, and be done for the day. And then, like I was saying before, go on about your day and enjoy life. So now moving on to the higher time frames. What are some of the pros and cons of using higher time frames? Some of the disadvantages are trading setups can unfortunately take a while to present. If you're waiting for a candle close to take your position, if you are on the day, you have to wait 24 hours to make that trading decision. Coming back to lower time frames, if you're on the 15 minutes, you only have to wait 15 minutes to make your decision. This leads me into the other disadvantage of more patience is required. If you set aside some time, let's say on the 1 hour chart, you're gonna have to wait 60 minutes and make your decision within that time. Unfortunately, this can lead to over-analysis when you take your position. With the 15-minute lower time frames example, you gotta be quick, you gotta make a decision, and you gotta snap at it and take that opportunity. With the higher time frames, it allows you to be, yes, more relaxed, but on the flip side, you can run into some psychological and emotional issues of over-analyzing the chart. And when that 1 hour candle is about to close, you may second guess yourself. This is why it's super important to have a trading plan, knowing when to enter, where to put your stop loss, and where to exit. We'll get to that in another video of trading systems and strategies and how to build a trading plan with systematic and defined rules, but that is a big plus in any trading scenario. You must have a trading plan. Another disadvantage on the higher time frames is not much action or opportunity. You may go a few days, even a few weeks without taking a trade because simply the market isn't aligning with your trading rules or your system. This can happen as if you are a trend-based trader, the market consolidates 70% of the time in the Forex market. So you could be waiting a while before a trade presents. On the higher time frames, price may gap. So you could be holding a position over the week. Once again, you can put this into your trading plan, whether you do or don't do this, but the Forex market can be subjective to gapping, and you don't want to be in a trade that gaps a fair bit, especially against you, because it won't hit your stop loss, which means price will be in the negative quite a fair bit. So now let's get on to the pros of the higher time frames, and the biggest one I can think of is less screen time. A lot of us traders, we got into trading to enjoy life and free up time. So, I mean, depending on the lifestyle, I've said this in multiple other videos, if my time zone lined up correctly, I would hands down be a day trader. I love the lower time frames. There's lots of opportunity. It allows me to be selective. But where I'm based here in Sydney, Australia, and trading the London session, when I'm doing everything that life has to offer, working on various other things throughout the day, time 8 p.m. comes, it's very hard for me to switch on, get in the zone, and really focus on the lower time frame, since it does require a lot more focus, a lot more discipline, and trying to get myself in that correct mindset is very hard. So that's why I trade the higher time frames now, and it has been a lot more stress-free and relaxing. We'll get to this in a minute on explaining what time frames you should be trading. Another really good advantage of trading the higher time frames is price action and support resistance will be more reliable. The price zones you find on the higher time frames will be more significant. Like I was saying earlier in the video, the definition of the candlesticks, if you're looking at the daily, that's 24 hours worth of price action in one candle. So if you're looking at the 4-hour daily for support and resistance level, they will be more significant and more weighted in your favor. So you'll be able to take more precise, more reliable, and more accurate trading opportunities on the higher time frames. Once again, you can also incorporate higher time frame analysis or top-down analysis into the lower time frames, where you can pick out zones on the 4-hour or daily and then go back down to your 15-minute chart, for example, and find those key levels and find trading opportunities around those zones. Another advantage of high time frames is you don't have to worry too much about news or random sporadic events that happen throughout the day. On the lower time frames, because you are getting tighter entries and tighter stops, like I was saying, news may shake you out. On the high time frames, that's not too much to worry, because when you're looking at, let's say, 4 hours worth of price action in one candle, your stop loss is going to be bigger. If you're looking at 15 minutes of price action on the 15-minute chart, you know, the candles are going to be a little bit smaller, resulting in a tighter stop loss, which means news may be subject to shake you out of the market and unfortunately hit your stop loss. On the high time frames, that's not so much of an issue. And of course, the best advantage of high time frames is it's great for beginner traders and it's great for lifestyle. It's great for living. Trading is one of those things we got into to free up time, and that is exactly what the high time frames can offer. You only have to check the charts. Let's say you're on the daily chart once every day for, you know, half an hour maybe, or if you're on the 4-hour or 1 hour, you have to check the charts every hour. So it's a more relaxed approach. It's great for beginner traders, and this is going to lead me into the conclusion of what time frame should you choose. It depends on all the commitments you have. If you have a 9-to-5 job and you can't dedicate more than, let's say, 1 hour in front of the screen, maybe the low time frames isn't going to work for you. And once again, there's nothing wrong with that, because it's all based on what you can do consistently, what you can do, when you can show up, and how much time you can dedicate to the charts. If you're only working part-time or you don't have a family, you may be able to get away with more of a day trading approach on the lower time frames, and you could incorporate that into your day, where you have maybe 2 or 3 hours, consistent hours in a row, where you can sit down and focus on the 15-minute chart, for example, and make your trading decisions then. It all comes down to lifestyle. It all comes down to what you feel confident in, what you feel comfortable doing, and it's all up to your personality. If you don't mind sitting back and taking less trades, then the higher time frame is going to be perfect for you. But if you want more action and more opportunity and you want to be able to be more selective, then the lower time frame is going to be for you. But on the flip side, if you can't dedicate enough time, unfortunately that's not going to work, because You're going to miss trade setups that you should be involved in. You're going to be taking the trades that you shouldn't be involved in, and it's going to really mess up your psychology. So to sum up this question, it's what you are confident with, what your lifestyle can offer, and how much time you can dedicate to the charts. There is no correct time frame you should be trading. It doesn't matter if you're on the 1 minute or the 1 day chart or anything in between. They are all going to be profitable if you can find a system or strategy to navigate. And that's why I love the AceFX systems, because they are fractal, meaning you can apply the system on multiple time frames. It's technical analysis. It's using EMAs, which are exponential moving averages. I won't touch on that too much right now, but they are dynamic support and resistance, gathering data from price action, and they work across multiple time frames. So you can apply the exact same system, value, and knowledge from the 15 minute, which is where the system was built and developed, onto the 1 hour or onto the 4 hour, meaning you can be more flexible, you can still have that high 60+% win rate, and you can somewhat be selective because we use indicators, allowing us to make sure everything's in alignment before we take a trade. Doesn't have to be, but once again, we allowed that selectivity, which is awesome for us traders. I hope you guys got some value out of this video. If you did, please smash the thumbs up button. Subscribe to the channel to help the YouTube algorithm get this video and knowledge to other traders, and smash that bell icon to get notified for any new content I release. Once again, I appreciate your time if you're still with me, and I'll see you in the next video.